30 seconds until the event. 20 seconds until news event.
10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Event has occurred.
Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. Can I please get a audio and screen check in YouTube and the Discord Trader Lab? Thank you. Well, everyone, welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting the Trader Lab today. I stream Monday through Friday, 11:30 to 1 p.m. Eastern Standard Time, and this stream is about integrating Bookmap order flow tools with auction market theory using the volume profile in the intraday developing time frame. One moment. Okay. You will be hearing some alerts in the background. There shouldn't be too many of them, but you will hear a few. One moment. Again, just to remind you guys, I am streaming from Costa Rica currently, and infrastructure in Costa Rica. I'm in a very small little beach town, monkeys swinging through the trees and the rest of it, and internet and power are intermittent, which makes it challenging. I do not trade live from here often, just so you know. And sometimes if you or if I am going to step out on the wild side, I would reduce size. But I did not take any trades today, but I certainly narrate them all the time, just so you guys know. The other thing about this is if I do disappear, it probably means the internet dropped out or the power did. And if that happens, I will come back into the Bookmap Discord Trader Lab channel. If I drop out of YouTube, I may have a little more trouble getting back in. Another link may replace the one if I lose this one, but if you cannot access it, there is a link in the bottom of the YouTube chat, so you can come over to the Bookmap Discord Trader Lab server, and you don't have to be a Bookmap subscriber. Bookmap will not solicit you if you should take that path if you'd like to continue the stream. And again, thanks for visiting the Trader Lab. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results, and please remember this is not a trade calling room. This stream is based on structured trades that you can download from the Bookmap Discord Trader Lab, 60 PDFs of structured trades so you can reverse engineer and determine if they might have a good fit for you. In addition, when we discuss statistics, which I don't spend too much time on, you can download stats that may help you get a sense of only probabilities of what might happen, and there is no such thing of what will happen in trading. It's only maybe. Always coming back to this, and if you're new in the stream, thanks for visiting. Trading is a statistically based random process. Statistically based means over a large sample size, the probability of one thing happening over the other, and the other part is you're in a random environment. It never has to happen. It's a random distribution of outcomes. It's really gaming theory. Very simple. Just how the casinos operate. Their business model, they've done really good only playing games that have a statistical edge. And if we isolate what we do as far as structured trades or setups, think of them the same way as a casino looks at their games. They are processes or games that are played with a statistical edge. the outcome of each hand, or for us, each trade is random, and it's over the large sample size that this edge shows up. The casinos extract dollars from gamblers in a random environment. Gamblers do walk out with cash. That's part of the joy. And for the casinos who see this like a business, and if you're a professional career trader, you will now see this like a business. Unless you want to sit at a slot machine, then you're going to see it like a gambler. You can be the gambler, or you can change where you sit or position yourself and potentially become the house. It's up to you to decide. The other thing is nobody can predict the outcome of the next hand in a casino, and we can't predict the outcome of the next trade. It's hard mentally, or psychologically, I should say, to embrace that belief, because we believe we can do better, and psychologically we need to do better. Now, now the need to do better is emotional. It has really nothing to do with the business. So what you need to fulfill a psychological need, being right, predicting, and all that, is not really based on the business of trading. It's based on underlying psychology in our wiring. Run from fear, run from the saber-toothed tiger. It's all part of our instinctual behavior, and it works really well to survive, running from the saber-toothed tiger. But when you run into risk, it's the same as running face-to-face with the saber-toothed tiger as far as your wiring is concerned. These are elements that are very important to learn, to understand, and to accept. Now, I'm not saying you should accept them. I'm saying is if you want to be in the business of trading, you're going to need to understand these elements. And again, thanks for visiting the Trader Lab. So let's go take a look at today and the open. So what did we do? We opened lower outside of yesterday's range. Yesterday, we had something called a neutral day. A neutral day means the first hour high and low of that day was taken out. And what does that mean? We got to understand what's going on. First of all, the market was long. Everybody's long, right? We had the rally and all this kind of nice thing. And then yesterday we had neutral. Neutral is a market profile term that means the first hour high and low are taken out. Now, theoretically, and I talk theory only because that's all it is. And theory is just another piece of maybe, isn't it? So theoretically, if you're able to take out the first hour's high or low, it means that a higher time frame participant was able to move price outside of the band. And the reason the first hour high and low is important was back when Market Profile was created by Peter Stottlemyre, and he was on the floor of the CBOT. And what it was is most volume in the morning goes off in the first hour of trade. Then we'd all go to breakfast. And this is the floor, don't forget. And then we'd go down to Manny's on Jackson and go to breakfast. That's what we all did. Then if the market moved out of the first hour's range because the volume had dropped off, typically, it meant that there was typically higher time frame participants who are able to move the market and who are potentially activated. So that's why the first hour became important. And in the market profile world, that's called initial balance. So why is that important? It means yesterday, potentially, if the first hour high is taken out and the first hour low, there's a battle going on between both sides because both first hour high and low are taken out. That means neutral. It's like a stalemate. Now, there's only about a 29% probability that's actually going to happen. So the other piece becomes, if you have two sides battling and it's almost like a standoff, which is what it was yesterday, because we came back inside the range after the first hour high, first hour low, and we came back in, that means now it's coiled. In other words, somebody's going to be wrong. Think of a consolidation. Somebody's going to be wrong. And all the energy that's wound up in this compression of two-sided battle, one side's going to be offside and it's going to release. I want you to understand what creates these conditions and then what it might tell us about what the potential is. So before we come in, we know this. Now, what else do we know? Let's take a look. You're going to find this interesting, I hope. let's go find out what's going on here. Okay, let's look. Now this is ETH, okay? RTH hasn't opened yet. So what we're going to do is before the market opens, you need to have a plan. Your plan has to give you a sense of possibilities, and that's based on probabilities. Opening lower outside of range. This is the overnight volume point of control. Fancy term, market profilage. Volume point of control is retail. And I always equate trading to shopping. Very simple. Why should we make this complicated? Let's make it simple. Trading's hard enough. Why do we have to add more complexity into something that's kind of simple? Now, random, that's a different concept. That is what makes it difficult. However, if we can cobble together an understanding of market mechanics and probabilities, it might at times give us an edge over our competition. So here's a statistic. I'm not going to spend much time. If we open lower outside of yesterday's range, and we did somewhere down here someplace there, the open is right there. This was the highest retail price from the ETH. In other words, fair. If it's a fair price and we open away from it, then there's a few possibilities. One is the ETH low. Let me give you that. That's about almost an 80% probability. Past performance, a 70% probability. Past performance, not indicative of future results. You got to vet everything. 70% probability. Well, we open there. This is not what you call a big leap of faith. Then, overnight volume point of control, the last retail price, high volume, 85% probability. Okay? Taking out the first hour's high, approximately a 67% probability. And again, we have no clue. Okay? So, and there's more, but I'll start with that. So what do I know? If I open here, I can anticipate selling. I can anticipate this, depending on how low I go, and nobody knows, how low. This is like the limbo. There used to be a song, and I forget, it was called the Limbo Rock. And I don't know if it was Chubby Checker. I don't know if you guys ever heard of that. But how low can you go? Well, if we're in a random environment, who knows? So we don't know. So we operate in I don't know. So if we're in the I don't know, then the possibility is at some point, if we get sellers and we run out of sellers, then those shorts that are in here become buyers, buy stops. Then the possibility with about 80, whatever it was, percent, which I already gave you, is this. Now, how do you get there? Do you get there? That's part of the joy. So everybody tracking so far, how we doing? Are we all conscious or did you pass out already? And remember, if you have questions, Chubby Checker. Wow. I think I damaged my spine doing the twist. If you have questions, please post them if you're in Trader Lab and if you're in the Bookmap YouTube. Thanks for visiting the Trader Lab. Please post your questions. There's a bit of a delay. I'll do my best to get back. Also, if it's not relevant to the stream, please don't post them or post them in the general chat over in the Bookmap Discord, so everybody can see it. Okay, let's continue. So, RTH open. Here we go. Now, let's watch. Now, I'm going to show you structure. Remember, this stream is based on structured trades that are available to everybody to reverse engineer in the Bookmap Discord Trader Lab. The outcome of every trade is random, and you need to understand the condition. The reason I spend time with you is what is the context. And we were having a very interesting conversation with one of our participants in the Trader Lab, Debbie, as a matter of fact. And it's about context. And if someone asks me, and I do get asked, but if you were to ask me, what's the hardest part of trading? Other than the emotional and psychological impediments, which I think are the largest obstacle, because I think you can learn everything else, getting it down is understanding the condition of the market and who might be on the hook. It's called context. And the other part is when it changes to recognize potential change. Very difficult. The reason it's difficult is we don't know anything's changed until hindsight. So when the market changes its condition, we're going to be zigging, and the market goes into transition. We're going to take stops. The thing becomes in a trade plan, understanding potential change and having a break. By a break I mean an emergency break, stop. And that has to be part of your trade plan. When it deviates from what you perceive to be the condition you're operating in, there needs to be a breaker to stop you. Now, the way we do it in the Trader Lab is called narration, and that's conditional statements. And I kind of got to this because when I built trading systems, they were built on conditions. So I always, kind of, not always, but after I kind of started working on systems, it's logic. So conditional statements would create a branch that would take you down a path of, and if you created a schematic, there would be a sequence of steps or conditions that must be met, and then sub-conditions that would take you into like a decision matrix. Very simple. So I kind of have that process built into my head because I think everything is conditional, and context is conditional. So depending on the condition.
Iceberg ESLICE 401.
Whoa. Hold on a second, guys. Let me see if I can lower that. Can't say I can, but I'm going to try. It might not have any impact on it, but you never know. So let's look at the first trade. Okay, so now let's look in the microstructure. So what do we have? Gap, high probability, open, overnight ETH low, high probability we're going to get over there. Overnight volume point of control on top, potential target, and clueless. But what might we get? Now I'm going to give you another piece. We are gapping out of range of the last several days, and there's really nothing below us, except the day we had a big breakout day and an acceleration or a trend day up. So that's poorly auctioned. That means the market can go down into this area. And like everything, we don't know. Okay. GH, I will get back to your question in a minute. So here's the open. So we anticipate the possibility of longs that are in here potentially selling. And if they get caught, then we can rotate and squeeze. So that's what we know. Is it going to happen? Will it happen? How will it happen? The term I like to use is clueless. So RTH open. This is developing volume point of control right here, this yellow line. I'm going to mark it. Let's watch. Now I do this, and this is microstructure. It is extremely nuanced, and you should not be in a hurry, ever. And if you're in a hurry, it might be because your pulse is racing, your adrenaline is pumping, and you have FOMO. I find that there's loads of opportunity, and I don't need to try to sell the high of anything because I have no clue where the high of anything or the low of anything is. Giving up on that, it's not my job. So this here is too high. So let's look at what happens. Seller, buyer. This is too high. Now, I don't know, are we going to take this out? What are we going to do? I am clueless. And write that down. Clueless. What does clueless mean? You can't predict. Watch. We take out this first swing. So far, fine. Okay. Now, I'm watching. I've got two-sided trade. So far, I've got nothing to do here. This is microstructure. Here's micro volume. Nothing to do here. right here, I get something called VPOC migration. This suggests right here, there now is too high. Here's my sellers. So now how might I get into this trade? Let me show you. Here, right there, high volume. Let's look and see if we return to it. Right there is a short in the Trader Lab. Watch. Is everybody tracking? Now, the next question I have for you, do you know why? Are you guys with me in the Trader Lab? GH, manipulation and all that, what does that have to do with trading? I'm just asking because it is or it isn't. This is part of the random nature. You're learning if price move up and down, the volume doesn't support it. It has nothing to do with it. Price moves all over the place. It can move for a lot of reasons. There can be volume or there can be pulling. And if they pull, it opens a vacuum. So if there's limit orders on top, or in other words, sellers, they pull, there's no volume. It creates a vacuum. It's not what you think it is. It just isn't like that, in my opinion. And at times it is. So if that's random, then how do you integrate an inconsistent process? So that's just all I can say about it because I don't know. I mean, let me put it to you this way. If that it's a part of, let's think casinos, that's a random piece. I cannot quantify that piece versus any other random piece. I can understand the volume and the price interaction. I also can understand order flow, but I have to understand what this says as a chassis for structured trades. I then add in the nuance. And that's what order flow does for me. So this is a short, you know. So anyway, this is your short. So right there, Trader Lab short, off you go, having a wonderful time. Now, what do we have? We have liquidity. Let me show you this. Liquidity. So if you took a short here, this is Trader Lab process now. And again, these are not trade recommendations. This is just what you can do. If you come to Trader Lab, you download these things and these trades, and you can study them and reverse engineer them. Now, don't forget our statistics. Our statistics suggest a high probability of getting the overnight volume point of control. What are you going to do about that? So let's look. This is called resting liquidity. This means something. If I'm short from up here, which is right there, there's my first trade, I believe, there, then I have to get risk neutral. So my stop can stay above here where it fails, and then I'm targeting this, or I'm targeting this for a scale, subject to your plan, and then I'm holding. Why would I hold? Because I don't know where the bottom of anything is. Now, this is called VPOC migration. This is part of a structure in the Trader Lab. Well, let's watch. Two possibilities. Everyone in the Trader Lab who's been in the Trader Lab for a while knows what's next. If this is too high and this is now the new price. Now, what does this say? Let's talk for a moment. This is a consolidation up here. In other words, from there to there is a rotational trade. And it's the cutoff is right there. The high volume is there. So that's retail. Think of this like shopping. I'm not paying that. Yeah, but it's on sale. And that's happening there. It's on sale. And we come back here. I'm not going to pay that. So too high, too low, retail. If I can't get back above here, just watch the symmetry. I leave the store. Simple, right? Now, what's too high? If this is too expensive, I break. In other words, we get in the car, we leave. Too high, too low, too high. This separator is called a low volume node. This is too high. I switch down the volume, developing volume point of control is here. Now this is retail. Too high, too low, too high, too low. So I've rejected this. And what happened when we tested it? We pushed away. Does everybody see that? I want to make sure we're all in alignment. Are you guys tracking? How we do it in YouTube. Now, we pull back here. Now, right now, we are auctioning this. Now, this moves down. What we want to see is the same thing that happened here. It moved down. We pushed away from it. It moves down. We want to push away from it to continue the down leg. And if the opposite happens, it might underline be saying this is too low. So now, and I don't remember this, so we'll have joy. Look what it does. We push away from it. Too low. You see the change? Can you see the opposite here? I'm showing you context and structure. I'm also showing you I have no idea what's going to happen because it's the way it is. We don't know. Okay? How we doing, Debbie? So, looking good, Lewis. There's our break. Uh-oh. Push the other way. Problem. So here's your choices. Exit. And now there's a couple possibilities. Here they are. And this will make you nutty because that's what it does to us. We have another structured trade in the Trader Lab. Here's what it's called. VWAP mid to VPOC or VHVN to VHVN. Which is it? Wouldn't you like to know? I wish I knew. I don't know. So this says the possibilities are this. This to this or this to this to this. And I can't tell you which one to trade. I'm going to say that's what it says. Now, if I'm thinking I'm out of range and I'm lower, this trade is qualified to come back here. And then it has to clear this to continue lower. So let's watch. So for me, the trade is the following. Short, short, cover, or hold. Short to here, scale, if there's enough range. Now look at this. You got to be using a toothpick and a micron telescope for this. So up to you. I'm showing you structured trades. The thing to understand, I'm sharing the structure. I cannot suggest to you what you do as far as the edge. In other words, if you see this trade and it's a Trader Lab structured trade, what do you need range-wise? Qualify the trade. Remember the matrix I talked about at the start of the stream, conditional statements. Well, what are the conditions, right? So if you got short here, do you have enough range from entry to here to get scaled to cover your stop if it comes back above here? The answer is no. You don't have you have a structured trade that's not qualified. You still mentally narrate it, and you still want to imprint in your brain the potential behavior. The auction could care less about what we need individually to get from a risk management and a statistical probability. You can learn these, and then you have to fit them into your trade plan, which is really about statistics. So outside edge, and here's another piece. Remember here, I'm going to give you another piece. Let me open it up a little bit. I want to show you, because I want you to see that there's a reason for all this. Remember this consolidation. We broke out. It's a breakout. We pull back and test it here, right? That's also a potential short. Why? We broke out. This is an outside edge. If this is too high, we're going to do this. Now we're trading this distribution. This drops down. So just follow the story. We want to see it do this. This is now retail. This is too high. Watch the story. This is the outside edge here. This drops down. Retail. That's too high. This is the outside edge. This sets up the next structured trade VWAP to VPOC, which is this. Do you have enough range? If it did, this is a short to here. If it doesn't get below here, it's going to come back potentially and come back here. That's the story. See it? Is everybody tracking? I'm taking my time. And this is for everybody who's trying to understand context, which, by the way, is fluid. So now, let's look. This is retail. Follow the yellow brick road. Follow the story. This is too low. This was too high. This is too high. This is too high. This is the open. Where might we come back? Let's look at the levels. This level was where our short was initiated. Remember? Right there. So I know the following. Short to here. And then if not, these guys go away. Thanks for playing. This is when the broker sends you the gift basket. This was too high because we rejected it. And in the micro developing structure, this was our original short, if you remember, here. This is also the open. And of course, anything can happen. If this comes back here, watch. Right here, microstructure. Right there, you see the volume, you see the seller. Now we're looking at a test and the potential to come back under here and return here or not, or keep going up. This is where your trade plan comes in. And where do we go? This is your target. You're trading this VHVN back here to there. Let's look at it. Now, by the way, if you're trying to do this, I'm going to suggest don't. I'm going to suggest you start reading it. This is kind of, there's nothing easy in trading, guys. There's no mechanical aspect. What I attempt to do is, this is like reading a foreign language, and believe me, it is foreign. And translating real-time behavior. I don't use any indicators. The reason, and what makes it hard is, there's no absolute anything. Why didn't it stop here? How about this? It could have. So what keeps me from just selling it here? Do you want to know what it is? Does anybody know why I won't sell it here? Come on. Take a chance. Willers, are you asking me a question in the chat? R to R. Okay, well, Debbie says retail. Okay, let me tell you why I can't take a short here. And I'm thinking I am, by the way, there. And because I have another level here. But what did not happen? Let's look. Where's my trigger? Do I have a trigger here? No. What do I have? I have maybe. Well, we just went through here. I don't have it struck. I have a location. This is like real estate. I have location, I have no trigger. Okay? Are you guys with me? Now watch. Where's my next level? So this is my area I'm stalking. This are areas. Now I'm looking for a trigger. This is the next piece. Here's my micro high volume. Now I have no clue. Look what else. This is how Bookmap is going to help. Now I'm in the microstructure. I call Bookmap the tip of the spear because now I'm zeroing in. 57 buy stops coming out. 54 buy stops coming out. These aggregate as I open it up at my location. Watch. Now Bookmap. Location. Remember, real estate. Location. Let me open this up a little further for you. I'm going to show you how I use all these pieces now. I'm getting down into fractals or microstructure. Okay? So, location. And I'm going, where's my trigger? Anybody see a trigger? It's still going up. I have an area. I have no clue. I am the clueless. So I need a trigger. What does a trigger look like? Are you in the trader lab? You've been studying triggers, haven't you? Not click the mouse here. Where's my trigger here? There's my microstructure. Here's my volume. Break high. That's not too high. How about over here? Here's my volume. I'm holding this. I'm testing this volume from above. Break high. Oh, well, that's not too high. Here's my volume. Microstructure. Break low. Where's my volume? There. Now what? Suspect. Watch. Seller took out this volume. Watch. Seller. Structure. Volume. Trigger. This is my short. Watch. Trying to get back here, right? So this is a short trigger. This is what puts me in the trade. This is the location, not a wall, an area. Very important. Are you guys tracking? Okay, how are we doing in YouTube? So, short, break, pullback, VPOC migration. Let's look at behavior. I'm spending time on this, guys, because what's the purpose of this stream? Think about it. It's to help you read the market, to speak the language. And, you know, I'm not here to dazzle you. It doesn't exist. I mean, let's get real. Everybody takes stops, but what can we do to interact with the market on a timely basis? That's what this is all about. Now, this moves from here to here. That is saying too low. This is, so right here, let's look at the behavior. Notice how we went from here, too low, back to too high, selling trigger, break. This shifts up. This is a uh-oh moment, but what does it have to do? If we're going lower, it can't go over this. What does it do? Pulls back. And what does it test? This. Too high still. That's also another Trader Lab short. Where are we trying to go? Here. Bang, bang. Wasn't it Cher who did some song, Bang Bang, They Shot Me? No. I don't know. I think I'm delirious. So this is too high. This is too low. So short, teeth chatter, back to the micro high volume, back to this. Volume is up here. We're in ping pong world. This will make you nauseous. Always trade with an air sickness bag. And what do? We're going for this. Come back here. Another Trader Lab short, or you're about to be stopped out. Guess what? Who knows? If you think you need to know, wrong business. Target. There. Now, helmet. And now here's the situation. If this comes down here, we're looking at the same process. If we can't clear this, we're going to come back here. If we clear this, then we have the potential to go south. We got to get below this. See the behavior? Same thing. Look, too low, too high. Too high. Is it too low? Let's look. Break below. Pull back. Potential short. Watch. You see? Is everybody seeing? This is process. This is auction market theory. You can understand this. You are on your way to a better market understanding and understanding of market mechanics. Is everybody seeing it? Share. Thanks, Debbie. Why am I spending time here? You want to speak market? You want to do what other retail traders can't, won't do? Do you want to be dependent on lagging indicators? I use no indicators. And by the way, that doesn't spare me the privilege of taking stops. That has nothing to do with it, right? This has to do with narrating an auction. And this is not easy. I mean, this is two-sided trading. It is abusive. It's my least favorite condition. Now, right in here, I don't have a problem with this because we're kind of, doing our thing. But I have not, and we're under the ETH low, so we are heading south, right? Looks pretty good for the shorts. So let's look. Too high, break, come back here. Too high. If I stay under here, I'm doing pretty good. If I come above this, that puts me back to this, or at least the mid in the VWAP. So let's watch. VPOC migration. Now you guys remember, right? VPOC, let's go. VPOC migration too high. Here, too low, too low. Break below, too high, right? Looking good, Lewis. Too high. Looking good, Lewis. Shifts down. What do I want to see? No cheating. Don't I want to see it push off? Let's look. What the heck? Look what happens here. Let's look. Right here. That's resistance in my thinking because it was too high. And then, so you see how this, once we break above here, squeeze, everybody gets carried out. That's where trade management comes in. So now let's look at this. Now, and this, by the way, I could not do anything with. And I told you I'm not trading today, but I'm trading it. Believe me, I am trading it mentally. This surprise, and that's part of trading. What is it? All these stops went out, stop sweep. It was ugly. So everybody gets carried out right here. VPOC migration. So this right here would be a short if you can activate. I could not. Even if I'm not trading, I could activate it. It's just too fast. So now I have a variable high volume node. I checked the overnight low. And the volume is all over the place. I'm really not liking this. What's too low? This and this. Now this was a squeeze. So remember, we have overnight volume point of control I have to be thinking about. So if this right here is too high, I can now return here. But I have no way in here. I'm just telling you. I looked at it and I said, well, that was a nice short. And I'm sitting there like a deer in the headlights, So there was no way I would not be able to take this trade. So if you were able to, if it's part of your plan, congratulations. I could not move this quick. Because I'm still like sitting there going, what? This shifts up. I'm looking for the right, the push. I get the push. That sets up a short. But it was just, I would not have, for me to get in here, I'd be selling it here. And I got to have, my stop's going to be over the high. And it just didn't fit for me. And this turns into junk. So VPOC migration, VHVN, VHVN, and you see we're all over the place. So this is not my thing. So let's watch it though. Watch. VPOC migration. So I have no clue in here. I know this is too high. This drops down. We break above. I don't have a trade. I'm going confused. This is too low. Confused. Break here. Test. Too high. Come back here. This is a potential short for continuation. Here's what sets it up. This is a problem too. This is very problematic. And if you don't take this trade, it's okay. I looked at this as a short squeeze. I did not get short. I would not get short if I was trading it. I pull back here. Right here, I have conflict because I cleared this. This is too high. I break down here, too low. See? I don't know if you hear roaring in the background. That's a troop of monkeys that aren't too far away. I have filters on this, so you don't hear that kind of stuff. Check here, too high. It's got to clear this to go lower. This is an aggressive trade because this is what you got to clear. Again, if it doesn't fit, you don't get involved. Your target is IB low. Or I'm sorry, IB 30, which is coming up. VPOC migration. We want it to push off. Where do we come back? Here. That's a short in the Trader Lab. Wow, those monkeys are really going at it. So this is a very hard trade. I mean, I could just tell you it's miserable. If you had a hard time with this, I have a hard time with it. And that's because it's two-sided trade. Is everybody with me so far? And we're only into 9 a.m. Look at this thing. Now look at this. So now, what do we got? We're at 9 a.m. and we have statistics at 9 a.m. 9 a.m. we have something called the IB 30. The IB 30, whichever side we break, we have the possibility of taking out the first hours. Whichever side at the first half hour breaks, we have a statistical probability of continuing in that direction. So right here, boy, the monkeys are really going here. We took this out, 9 a.m. low, which is there. So we just popped it, and then we're looking for us to pull back and continue. Instead, we come all the way across and take out the first half hour high. That changes the context around to a long probability. And let me explain what it does. And again, not my joy at all. It puts this on the table, the overnight volume point of control. Remember, 83% probability, okay? You don't hear the monkeys, Rob? Well, that's good. They're not that close, actually. They're probably, I don't know, 100, 200 feet away. Maybe not that far. Might hear them in Discord because I don't have filters in Discord for noise. So let's watch. So market comes up. We traverse the range. We take out the IB 30, sets up the IB high. The IB high has about a 67% probability, and the overnight volume point of control now has about an 85% probability. So this sets the longs in motion. So let's look. So we come up. It's 9:15. Wow. If you don't hear these monkeys, you're lucky. Wow. Variable high volume node, VPOC shift. We want it to bounce off. It breaks down. Miserable trade. Too high. We shift up. You see how this chop is? This is very bad for me. I don't do well in this. $903 TE. Well, I'm getting a question that was this a hint to get long? Well, we want it to stay below here, and we want it to stay below this one. It was okay here, and this is sort of your over-under right here. It's when it broke through here, you're out of your short. This, it's a mess. I mean, this is not my thing. I'm going to tell you, it's not my thing because this is chop. And I posted in the Trader Lab, we were in balance. So this is very hard to trade. It's very easy to make, to get chopped up in here. And here's why. It's not honor. I mean, it's just two-sided trade. The thing we have going here is statistics. So this becomes, if this is the high, which it's going to be at 9:30, then the statistics are favoring the long side. Too low, VPOC migration. If this is going down, it's got to push off. What does it do? It does the opposite. So this can set up a long from here, playing towards these statistics, which is up there and here. But you could take a bunch of pain in between trying to get positioned for that, because that's a target based on the probabilities. Here. So that's the target. Okay. So this trade is doable, but in here, you could hurt yourself pretty bad. I mean, in this condition, it's not one that it's not aligned with what I do. In other words, I have a trade plan, and it's like the casino. It's like everything else. Once I get into this, what I have to do is I'm looking at my statistics, and I know that the market has changed. It failed to do something. It failed to continue lower. I also know that there are stops sitting in the market. Sellers, right? So I know, this was all fine until here. So this is all fine. Getting this short up here is fine. Getting below here is fine. This shifts down. We're looking for this. We get the opposite. We get that. We come up here. I'm going, okay, potential to come back, mean reversion. I'm looking for this. I don't get there. I don't get there. Then you get your explosion up. Now what? Well, puts this back on the table. So this is just hard trading. I just find it really hard. Hard for me. If it's easy for you, give me a call. We'll talk. We come back here. What do we got to do? We got to clear this to go lower. And this is mean reversion. So if you're short from here, you're looking for this, and you're looking for it to come out here or there, actually, low volume area, and then down to here and out the bottom. If it can't get below here, too low, then we're going to come back and check what was too high. That's the logic. How does it do it? Random. Okay? So this becomes our target. Now, the next possibility is the following. And this is really what's going to happen. maybe. If this is too high, we're going to come back here. If this is not too high, we can fill the gap and squeeze out the rest of the seller. That's what I know. So here's the trade. Long, if you got long, and really the long is really down here. Getting long here, very difficult because you can easily come outside because of mean reversion. You have to decide. It's one of those things. I know the probability is to come here. I don't know how, if, or when. And write that down. We can understand market mechanics. We can't understand the path. This is like saying, well, I know I'm headed towards the East Coast, and if I just point the car kind of in this direction, but I don't know the roads, I don't know anything. I just know maybe I'll hit the Atlantic Ocean at some point. Yeah. So that's what I know. I don't know how, if, or even when or not. Yeah, I don't know anything. So this is too low. Don't know it. This is too high. Is it too high? I don't know it. That's why it's a statistical target. So if I have a long, if I'm able to get long, and the outside edge was out here, here was the last outside, then see, if you had a long here, even if you got involved here against this volume, your stop would be under here. Then I like the trade. Getting long here, I think, is pretty difficult because your stop would have to be under there. Does that make sense? So, and let's talk about why. This is too low. We rejected it right there. You can see it. You can see the buyers. You can see the pullback to this volume. Let's look at it. Microstructure here. Buyer. Volume is here. Pullback. Who knows? Too low is here. Stop has to go under here. If you're getting long, your stop is under there. Not saying you can't. Pull back to here. Your stop has to be under here. Is that okay for you? It's not terrible, it's a couple points. And then you're going here. Is that trade fit your risk reward parameters? Now let's watch the next trade. Now there's a couple possibilities. Let's go back. Overnight volume point of control. Price check in aisle 3 in the big store. Too high, we rejected it. That's what all this selling is about. Did we find too low? Let's come back and check too high. If it's still too high, what are we going to do? Mean revert. If it's not too high, what are we going to do? Push through, fill the gap. That's what I know. I don't know anything else. That's all I know. Thanks, Slaughter on the bond auction. So let's look at this trade. So this is your target. Now, if you think we're going to fill the gap, you'd be holding a runner. If you don't think we're going to fill the gap, you're going to be flat. If you think we're going to mean revert and this is too high, we're going to come back here. That's the choices you have as a trader, and any of them can be correct. So let's look at the microstructure and a potential short. And this is the way I kind of think. I'm going, if this, then that. If not, then what? If I get to the overnight volume point of control, and because I'm auction-based in my thinking, it's too high. The market has a tendency to visit prices in all fractals and time frames to check them. It's like you go into the store and they go price check in aisle 3. We don't know what it's going to do, but we do know what creates these levels, and that's volume. And if the market had left this before, it can come back and check it. And if it's still too high, it sets up return to the initial balance. The initial balance is the first hour's high. Here's how this trade would work. If this is too high, we get a short and we come here. Outside edge, low volume, back here. So a short here sets up a trade to there. If we take this out, we come back here. If we don't take this out, we can potentially come back, take out the high and fill the gap. And then we have another statistic up here also, but that's another story. So let's look at the short. This is a short. or not. You know, it's like, what's your trade plan? I'm going to just show you the trades. So this has a probability, and let me show you the trigger and everything else. I'm going to show you the full thing if you're interested in it. Are you guys interested in this, or should I just go along a little quicker? Okay. I'm Trader Lab saying, let's see it. Okay, now here's what's important. Alignment. Microstructure. Liquidity in the book. Let's come back. I want to show you something. I should have showed you this sooner. See this liquidity? It's been sitting here. Let's go back. Since the open. Here. There. So when you're looking at this, I look at the price map, which is volume, and look at the alignment with the order flow. They're sitting in the book. They're waiting for it. They're giving, come on, get over here. So I'm looking at this and I'm going, okay, first of all, if I'm long, I got to scale or flatten out, which was the trade. Now, if this is too high, I'm looking for it to come down. So let's look at the trade. Watch. This is the target here. Let's look at it. Microstructure. Target. Liquidity. Watch. Volume. Seller. Does this look familiar? Now, where's my high volume? It's there. And let's go. Let me take you a little further back here. I just want to open this up. This is how I use Bookmap. I mean, there's a lot of other pieces to Bookmap that'll help you. I'm just going to try to keep it expedient. I cover a lot of this in my other streams that are posted in the Bookmap Trader Lab. There's a library of webinars I've done that you can see a lot of this behavior. Plus, some of them are 4 hours long of real-time narration as the market's rolling. Here, I want to take you into structure. Here's my liquidity. There's my target. I do not pick the high or low of the day. I do get lucky. And trust me, luck. You can't take luck to the bank. You can take skill to the bank. And you can accept randomness like the casinos do, because who knows? Here's my volume. Too high. Don't know. More volume here than here. Clueless. Seller. Do you see the change in behavior? Watch. Where's my target? There. Watch. So I see my seller. Okay. Do you notice the change in behavior? Volume. Buyer. Buyer. Volume. Where's my buyer? No, I get my seller. Volume. Too high. Volume. Too high against this. Seller. So subject to my skill set, I can be short here or there. Same. Is everybody tracking? Do you guys see it? 2 entry opportunities. If you're quick draw McGraw and you have unconscious competence and you understand the nuance, you're short in here. If you go, oh, that's a short, and you're going, darn it, and now you're experiencing emotional stimulus and you're losing your mind, it's called FOMO, your job is not to get engaged. It comes back here. You know, right there is the volume in this structure, which is there. Can you see it? This is the test. Remember I talked triggers? Remember? Triggers? Trigger. There's the entry. So your entry is here. And if you were going like I do, you see the seller and you see now this is too high, this is too high. All we did here is test it. Short. Here or here. You'd be in here, wherever. Stop is above here. Where are you going? There. I'm right ahead of it for a scale. So watch. So you put your short on, you get a scale. Now, let's manage the trade. Just follow. So you'd be scaled, and you're sitting here, your stop goes here, or subject to your trade management plan. Let's watch it. Watch it. Let's assume you got your scale, comes back up. Let's assume you did not manage the trade. Let's assume you got scaled, because this is the target. You entered in here, and your stop was here. You would have maybe a happy meal or a distressed meal. Doesn't matter. Where do we come? Where do we come back? To the volume. And what do? Liquidity comes back in the book. And what do we test? This. What do we do here? Chop, 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 chop. Volume. Let's look. Break. Pullback. To what? The volume. Anybody recognize anything similar? Trigger, break, pullback to the volume. Trigger, break, pullback to the volume. Is everybody tracking? Is that a yes? Is that a no? Is that what? Yeah. This is trading. Write this down. Random, random, random. Get a rubber stamp. Put one on your forehead, one on your hand, and put the other one on your screen. Random. Casino. Random. What do we know? Too high. What do we know here? Buy stops. Let's assume you got taken out. Maybe you did, maybe you didn't. I don't know. How do you manage your trade? Do you give it, use a shoehorn, give it a couple ticks, put it above the liquidity? All that's subject to your plan, you know? But let's assume you got taken out. Let's be conservative. And right here, you're thinking, oh my goodness, it's going to go to the moon. No. Seller, high volume, test, short. Where's your scale? Here. Where's the stops? Under here. What are we shooting for? Mean reversion. Where's the stops? Mid, VWAP, and maybe back to VPOC. Let's look. Mid VWAP. Let's see. I haven't seen any of this, so this is all new to me. Down to here, this is your target. So what you're doing is you're trading high volume. I'm not paying that. Well, let's go back to retail. Target. Stops. Target. Does everybody see this trade? Now, I still haven't seen any of this. So what's going on? Anything? Oh, there you go. Life in the fast lane. And everybody with me. The big bars to the right. Bars. Are you talking about these vertical bars, GH? Those big bars to the right are volume. This is delta. So it's just showing me what I'm seeing here. So when I have these green bubbles coming up, it's just showing me the aggressor, and that's buyers and buy stops. It's also, so, and I'm just seeing this represented over here. That's all. I don't need to see this, but it's there. Is that what you're asking about, GH? Let me know. $10.17 was an IBC. 10.17, my time. Okay, I'm getting it. I was an IBC at 10.17, 15, 16, 17. Oh, you mean this? Yeah. Right. Yes, this could be a long. So we have two setups here. We have a short from here to here. That's why the scale and the target was here. Okay? Then this is either a long back to here. It could be. And you're looking for, and it has, but here's the deal. You got to clear this because we rejected it. So this is where context comes in. So here's what you have. Short to there. Thanks for pointing that out. This is a structured trade in the Trader Lab, long back to here. And either through or selling structure, short back to here, back to there. So what you've got right here is you've got a short and a long. And one of them is going to work. Now, I'm kind of inclined to be bearish. Call me crazy. Don't call me crazy. But I'm inclined to want to be on the short side. And if it, by the way, if it took this out, because it hasn't taken it out and we rejected it, that suggests to me we're going down. This is the priority of inputs. And thanks for asking that question, teammate. That's a very good question, right? It is an IBC. It's an IB continuation trade. But what has the auction told us? And it hasn't said absolutely anything. It says maybe. Remember, the best you have in trading is maybe. It's saying this is too high. That's why the short, the target is here, because we might get buyers. And if we take this out, then yeah, we go north. If we can't take it out, and the reason is it's too high, the short then, if we get under the IB, this outside edge, low volume, then the next stop is down here. Return, mean reversion. Does that make sense, teammate? That's a good question, too. Yeah, you're welcome. Thanks for asking. I forget all about these. You know, when I was looking at it, I was actually thinking the same thing. IB6. And then, you know, I forget. I should probably write these things down. So now, coming under, we have what? IB. So if we come on, so this is too high, back to retail, mean reversion. Now what? Let's go look at our volume. This was too low, so it's another target. This, and then the first hour is low. And then we have something called a neutral day. And so you guys know neutral days do tend to come in pairs. So where are we here? Oh, here we are. So let's look. So here, and when I say here, it's like, you know, they're sequential to me. So this was a variable high volume node. It's a sequential location. This is the outside edge, high volume node. This is the IB. And if we take this out, then we can put our helmet on. And then you basically are going down the rapids potentially, not a recommendation. This is our target, extended target out here, not a recommendation. This is not easy to trade. I mean, I don't think the term easy applies here because it's random, right? Consolidation started 1051. I'm not sure. This is a short off the overnight VPOC. That's the key to this. The long at the IB brings you back to the overnight VPOC. If you clear it, then we're looking for the overnight mid and getting into the range. You don't clear it, it's too high, and we're coming back here. That's it, Fred. Then if we get under this, now all we did here, besides squeezing and abusing everybody, thanks for playing, is check this volume. It's too high. So that sets up out the bottom. This is the only target I've got in the areas down here. So then I'd be trading towards that 45. Not a recommendation. Broke lower is a short. If so, on breakout, would you wait for retest? Well, my short is up here. Fred. Now we have another trade that'll potentially set up in the Trader Lab. Let me explain what's coming. We have a couple ways to play this, and you got to be very careful now. Market is short, so we can anticipate counter rotations. We come out the bottom and rotate back in. It sets up a couple possibilities, and unfortunately, none of them are pleasant if they don't work. One is something called the IB continuation trade, which is what the long was off of here. If we come out here, it sets a short up for the continuation down. If we come back inside the IB, it sets up potential to revert back to these levels here, here, and here. So that's what I know. Our low volume outside edge of this distribution is there. Let me open it up. So I have a couple possibilities. All of them are shorts, by the way. So I have no longs, not a recommendation. I always got to say that because I'm kind of required, because this is not a trade calling room. I just know what might happen. I don't know what will happen. I never will. So I speculate on what might happen. I get paid for taking the risk, and I get paid for being willing to operate in a random environment. That's why we get paid. Casinos get paid because they're in the same condition as we are. Okay, let's watch. Let's see if we can see triggers. And these are not trade recommendations, guys. Everybody gets abused. Part of the joy. And it's the abuse part of it is basically overhead and cost of production. It's very hard to separate yourself because of dollars, I understand, and the emotional attachment, and you feel it emotionally. But I can tell you, in the casino business, somebody walks out with cash, it's just cost of production and overhead. You got to write that down. And it's not easy to separate yourself. I'm saying is that's your major obstacle. That'll keep you from taking the next trade when it shows up, because now you want to be right, you want to earn it back. Casinos don't think that way. They don't operate their business that way. That's why it's so hard for us. So let's look. This is our IB low. This is an outside edge. Outside edge. This is a low volume node. So if we look at this like a distribution, this is the outside edge. What's above this out here? Let's think about it. You got to think about this. Stops are sitting above here. So it can do anything, of course. This is a buying structure, microstructure. It's a trigger, but it's not a long. It's showing us that we're going to potentially have an upside rotation. So we're just narrating. We're not trading, right? We're hanging out. Let's watch. So let's watch. So this is too high. This is our outside edge there. That's a low volume node. We're going to keep an eye on that. We're going to watch this volume area here, and we're going to watch this outside edge. So right now we're looking at a potential short, and we have no structure yet. So we're just cruising. We want to watch this, which is related to this volume for potential short. Our obstacle is this volume here. So right here, we can push off. So when I'm looking at this, I see a structure that suggests to me the market's going to move potentially higher. Now, I don't know anything. How far will it? That have to do anything. This keeps me from getting short at the moment. It lets me look for this rotation. Now I'm going to be looking on the other side. What do I have? I'm in micro. And these are not trade recommendations. Let's narrate together. This is my outside edge, and this is sloppy. And very easily come back here, come back. Yeah, it could do anything, right? So let's not predict anything because we can't. But what we can look for is an opportunity to get short somewhere. Structurally, it would be out in this area. Stops are sitting above this swing. This is the mean. So if we come above here, we have the mid, the VWAP, and now we're just going to tour. Let's watch. These are not trade recommendations. We're now up to our low volume area right here. You guys tell me what you think. Not a trade recommendation. What are we looking at here? Not a trade recommendation, just follow the yellow brick road. Follow the yellow brick road. Remember, this is retail. This is outside edge of this distribution out here. We're in mean reversion now. So this was an area to observe, just like this is the same behavior. That's why this set this up. Now, how high does it go? That's part of the joy. Don't know. So if we return to the mean, let's just go look at our levels now. Stops are above this, and then we have stops here and here. If we can't clear, if we test this and push off, it sets up a potential short. Back to there, back to there, and 45. And we could just sit in garbage here. You know, it can do anything. This is not a fun day to trade, you know, because of this. I don't know if fun's the right word, but it's just a difficult day. So what you're doing here is you came out into this liquidity, back to the mean. And where's retail stops? VWAP and mid. So now let's go to the other side and try to see what's there. If there's anything for us to work with. If we come through this, this is the next low volume area. It's out here. Let's label this. So this is like a potential outside edge of the whole distribution. And that says, again, we're going back into balance. So what we're looking at is this. From here to here. So if we push through this, it sets up that, this, and nobody knows where, you know, this was too high, right? That's a short for an IBF. So the trade is there to there, the short to there, to wherever, back to here. And since we got through this, it sets up maybe back here or here. And I couldn't tell you because I don't know. That's what this is right now. It's still not fun. Here, let me show you a little something else here. Here, let's just watch this go. I got about 5 minutes, by the way. It's not an easy day to trade. If I mean, days like this, I just like everybody else. I take my trades, I take my stops, I get my scales, I do whatever it does, it does. And if you have an edge, it'll show up. There are going to be days you don't. You just it does what it does. So that's what this is. But what do we know about today? Two-sided trading. We know we checked the overnight volume point of control, too high so far. We know that I think we had our shot to the upside, and I suspect, that's all I have, suspicion, that we're going to take this low out at some point, and the potential is to get down to 45 or not a recommendation, to get down there. High volume node and intermediate time frame. So this is my target. So if I can get a short that sets up cleanly, get risk neutral, I'm going for this, or not. But I'm still inclined to think that we have a chance to come out the bottom. Any questions? I hope you guys got something out of this today. If you're in YouTube, I appreciate you visiting. It's just that this is what it is. This is trading, I wish there was something more that I can offer. But the reality of trading is this is what you got. It's what's going on. How do you get in alignment? Risk management, structured trading, developing an understanding of the mechanics of how the market works, vetted structured trades where you have a statistical edge, but the outcome of any interaction is random. This is the casino business. We are attempting to sit on the house side of the table. The outcome of any trade is random. Casinos deal the cards. They are random. The way the gamblers play the cards and how they interact is random. So it's all random. The casinos only play games that have a statistical edge. And because they don't change the game, they're not emotionally attached to last hand or the next one. They just play them the same way. That's how they extract the dollars from the gamblers over a random sample distribution of interaction with gamblers. They don't know which hand is going to pay them, and they don't know what's going to pay the gambler. We don't either. It's very important to try to distance yourself from all your emotional needs. And that's what will take you out of this business. Over trading, needing to be right, needing to recover the last stop you took, hesitating because you don't want to be wrong, all that stuff, right? If that's what you're doing, that's not what casinos do. So you need to emulate the gaming business in all its facets. In fact, in the Trader Lab, that's what the Trader Lab is built on. Understanding market mechanics, how the market works, why it does what it does, and also understanding the random nature of our business, and we have no control. The only thing we have control over is ourselves, hopefully, and our trade plan. And the thing about a trade plan is, and this is what we work on in the Trader Lab. In fact, you're all welcome. There's 60 PDFs you can download from the Trader Lab of structured trades. You pick one, reverse engineer it, make it your own, and then watch how it behaves and see, once you understand the mechanics of the trade and how it fits in alignment. See, the thing about trading, it isn't one size fits all. It's the first and primary input. It's what's the condition of the market? Well, we're out of yesterday's range. So far, we tested the retail price in the ETH. It's too high. And if we stay under here, it leaves the bottom open. If we stay under here. Now, if we get above here, then we can fill the gap and potentially get up here. If we can't get above this location, then that's potentially come out the bottom and go here, or none of those. That's what I know. I don't know anything else. This is the Trader Lab, and this is what the reality of trading is. It's maybe. So how do you operate in a maybe random environment? Anchored inputs. The primer webinar I did, and I did it not even 2 years ago, has over 27,000 views. There's a good reason why it has that many views, because it speaks to something that most other trading educators don't speak to. It talks about the business of trading, and it talks about structured trades and understanding this process from a high-level overview. In other words, market mechanics. Why does the market do what it does? How do you get in alignment? And you're all invited to visit the Bookmap Discord Trader Lab chat, and there's a lot of additional free education. Stocks, options, crypto, market maker behavior, how to use a high-tier tool like Bookmap, order flow, understanding algorithmic behavior, options trading, market maker behavior, goes on and on and on, and much more. And there's a link in the bottom of YouTube if you're interested in that. You don't have to be a Bookmap subscriber. Bookmap will never solicit you, and it's all free. Also in the Trader Lab, it's a community of like-minded traders looking to leverage their collective experience. It's a team effort. We're all looking to get better. I look to get better every day, and I'm not saying I'm just like you. The only difference is I've had more opportunity to wake up in the same place. I call it Trader Groundhog Day, and I'm going on 44 years of trading. That doesn't mean I know anything. What it means is I've spent more time at dead ends. That's what it means. And it means that I've eliminated the things that don't work for me, and the illusion that I was on the right track with processes that were defective. The problem we have, at least I had, and I only talk about me, is that in a random environment, you have winning trades. And it takes you down a path of trying to tweak and tune a defective process. And the thing you don't know about it is you believe it's working, you just got to make it better. Maybe another couple indicators, maybe an adjustment, maybe another time frame, maybe this, maybe that, a little salt and pepper, throw some mayo in there. And that's what we believe, and we believe it because it's random, and we have success with it. The casinos don't operate that way. Why would they not do the same thing if it worked? They don't do it. Maybe we can learn from a successful business model, which is gaming, and try to emulate a successful process, not sit with the gamblers who are tweaking and tuning with random play in a random environment. The casinos are dealing random cards in a random environment, but they play their game exactly the same way with anchored inputs. This is what's covered in my primer webinar, and you can access that plus a library of webinars, and some of them are up to 4 hours long of real-time narration as the market unfolds, just like what you see me doing here, but 4 hours of it if you're inclined. Please give a thumb up in YouTube if you got something out of this. I appreciate you visiting the Trader Lab. Remember, the Trader Lab is here for you. It's a free online community of like-minded traders. It's a serious endeavor for serious traders. It's not romper room. It's professional. If you are satisfied with what you're doing, by all means, bring it with you to the Trader Lab and help us improve. There's no right way to trade, but we can certainly identify the ways that don't work. Randomness does not work. The market is random. You need to be consistent and anchored. You need to be able to measure it. You just like the casinos. They only play games that have a vetted statistical vetted edge, which means they don't make them up as they go. They're not emotionally attached to the outcome. They just deal the next hand. We have a real hard time with that, especially if we take losses because of our emotional attachment. Casinos don't work that way. Maybe we can learn something from them. Thanks for visiting, guys. Hope you guys are having a good day. Thanks for visiting the Trader Lab. Remember, these streams are available to Trader Lab participants for review. Remember, screenshots, circles, arrows, build a library, build a statistical base. And remember, we can trade with confidence. We also have to accept that we are trading in randomness and depend on our statistics. So we are operating like a business, not like an emotionally triggered individual, which is what most retail traders are. Thanks again, guys, visiting the Trader Lab. Please give a thumb up in YouTube. I hope you got something from this stream. Remember, we can only deal with what the market offers, and hopefully if we have a vetted trade plan, we can stay in alignment with it. And when we get out of alignment, we pay for the privilege. That's the real world of trading. Thanks again, guys. Appreciate it. See you soon. And please, in the Trader Lab, thanks again for being part of this terrific community. If you're in YouTube, thumb up. Also, there's the link in the bottom of YouTube if you want to visit Trader Lab. Take advantage of the resources and a great online community. Have a great day. See you guys soon. And remember, trade with a plan and trade with an edge.